What's happening? What's happening? What's happening, everybody? Let me pause this. Sitting up here looking at Black Chicago Be Like Pod 108. I Let me get my thoughts together. I came back here to pay my bills. Then I was looking at my property tax bill, and it was like you can pay it online. And when I went to the website, they was talking about charging me $17 and some change to pay it online. Man, I'm driving up there tomorrow and pay that. Paying those $17 just to pay online. Online should be free. Now that I got the venting out the way, let me make sure I don't see Robinson in here. He not in here, so we can go ahead and get started. Hey man, it didn't work. When I was talking about saying Al Gore's internet, the video that I did today, they did the same thing. It adds suitability. I don't know, man. Maybe YouTube just don't like me no more, man. Maybe they don't like me. Maybe they don't like the fact that I be talking about ICT. Maybe I don't know what they don't like about me, man. They just start doing. One day they just start doing it, and then it is what it is, man. Shout out to Gang, man. Now, typically, I usually. Oh, wait a minute, man. Let me back up. How rude am I? Good evening, everybody. Thank you for tuning in. If you don't know who I am, my name is Timothy Lee Rogers Sr., and I would like to welcome you to another episode of Tim's Tidbits. We don't have a regularly scheduled program because I just get on Al Gore's internet when I feel like it now. And today, I felt like getting on earlier because I had something to say. And then this evening, since you all sat through me stumbling and bumbling with the math as if I went to Ely High School. My math was not mathing today. And I was just stumbling and bumbling. And since you sat through all of that catastrophe, I said, hey, I'm going to offer something else up. Now, I usually do this with the gang. Most time it be with the Black Spider members. Sometime it'll be with the gold members and the Black Spider members. But today, I decided, hey, I'm going to do it with everybody on Al Gore's internet because I don't want people to say, hey, Tim's always locking the good stuff behind the paywall. I don't lock stuff behind the paywall. The channel membership. Now, don't run out and say, hey, Tim said he do this with the channel membership. Let me go sign up for the Black Spider package. You don't have to go sign up for the channel membership. The channel membership is there. I used to be pretty active with the channel membership, but right now it's just one of the things where, hey, it's the gang members who, I guess want to support your boy, want to give back and stuff. I can't say why people are still subscribed to the channel membership. So, I do get on here with them from time to time and I do stuff when I have a thought of something I think somebody might need, or, what I'm saying? I just try to help as much as I can, any way I can. But again, this is not a solicitation for you to join the membership. What I will solicit is if you are a consistently profitable trader, Apex has announced yet another sale. How surprising is that? This time it's 90% off. There's a link right down there in the description. If you choose to try a funding company, I deal with Apex right now. Hey, so that's who I talk about. Not sponsored by them, but that is an affiliate link. So if you're going to buy a valuation, now's the time. 90% off until October the 5th. 90% off. But if you're not a consistent trader, do not go try to get that evaluation account. Getting more money to manage is not going to make you profitable or not going to make you consistent. Do the freaking work. Like I said in Tough Love with Timmy this morning. Now, let me see up in here, and then we gonna get to it. What's up, Rhonda Green? What's up, Here to Learn and Share? Rhonda and Here to Learn and Share. They both posted at 4:43, but Rhonda was a little bit quicker on the draw. So the first place goes to Rhonda Green. What's that, Rhonda? I was wondering who was here waiting and didn't take the opportunity to say hi first. Here to learn and share. I guess she's talking to. Here to learn and share. Oh, I see what you're doing. You trying to let other people be first. Oh, that's so sweet of you. What's up, Kim? What's up, Pamela? What's up, Michael Roguez? What's up, Hans? That's all I see in the chat, so that's all I'm gonna say. Let's get to it, man. Let me pull up my pictorials. What am I about to talk about today? What am I about to talk about today? I'm talking about price. Why does it do that? Why does it I don't know what my computer updated to, but for some reason, there it is. It be putting that little bar at the bottom for some reason. We are talking. Who remember when I made this thumbnail, when I made this picture right here? Who remember when I made this? It was a while ago, and we was in the Discordia while I was putting together a thumbnail, and I took this picture on my phone. It was for it was something about the people that be watching, like the haters be lurking or something. I was talking about the haters, they be lurking and watching. Who remember what if you remember when I did this while we was in Discord getting ready for the what's name, put a one in the chat if y'all remember when I took that picture. All right, now what are we talking about? Let me turn on my fancy dancy. We're talking about price levels I'm watching. I do got a spot on there. Price levels I'm watching for the last trading day of September. Timber. What's up, Michelle? Should we say it one more time for Rocky? Timber. Shout out Rocky, man. Shout out Rocky. Okay. All right. I know you're looking at the chart like, Tim, you just got regular stuff on there. What's up, KC? Yes, you're right. Now, what I typically do with the gang and like our private videos is I try to do what I wish I had when I first started out. And that is I try to walk through the chart, walk through the price section, and talk about it in a way of why I'm picking this level, why I'm not picking that level, what drove me to pick that level, what did I see in price that I try to walk through the why, because a lot of times when people as individuals, right, a lot of times when we explain stuff, we explain it with the, like me, I've been driving since I was like 14 or 15 years old, right? I've been driving motor vehicles since I was about 14 or 15 years old. I know I've been driving since I was 15, like driving around, you know what I'm saying, without any parentals in the car. Because I remember one night, me and my little brother drove to the gas station in the deep side over there on the corner of 56 and Sunrise, and I got pulled over and got a ticket because I was a kid driving, because in Florida back then, and I'm pretty sure it's still like that now, if you got, they used to call them restricts, now they call them permits, right? Yep, I've slipped into story time. They used to call them restricts, and if you got restricts, you're not allowed to drive a vehicle without a licensed driver over 18 in it, and you're not allowed to drive after dark at all. If it's nighttime, you can't drive at all. And so here's me and I'm 15, and my brother, he's what 4 years younger than me. 72 said like almost 4 years. Almost 4 years. Yeah, he's like three something years. So I'm 15. So he's like 12. You know what I'm saying? So we two huckabucks drive, you know what I'm saying? I probably look like this in the car. You know what I'm saying? And so the police pulled me over. I'm like, man, he swearing me for nothing, man. He swear me I ain't did nothing wrong. No, he pulled me over because we two kids driving the car in the middle of the night. Oh, you know what? That could be it. I never thought about that. I never thought about that. That could be it. I don't know. I'm glad you said that. Every video from now, I ain't gonna say that no more. I ain't gonna say that no more. I'm just say, I don't know what I'm gonna say. I don't know what I'm gonna say. Black spiders. That's all I'm gonna say. Now I done got lost in the story. I don't know where I was going with that. Oh, so I've been driving since I was 15, right? Because I remember when I was 15, I got pulled over and I got a ticket for driving at night and being 15, right? So fast forward to 51 years old, right? Get off my screen here, learn shit. Fast forward to 51 years old. When I tell somebody how to drive, or like when I was teaching my son, I was teaching him how to drive. Sometime I would speak to him with 36 years of experience, right? I would speak to him with 36 years of experience, but I'm not giving him 36 years of education. I'm just telling him what to do and assuming that he know this 36 years of things. You know what I'm saying? And I'm like, son, why are you doing that? You said turn right there, but you didn't look to see if it was a car or you just ran them off the road. Oh, you said turn right there. So he was just doing what I told him to do. But me, with 36 years of experience driving, I know I need to turn on my blinker. I need to check my blind spot, right? I need to make sure it's safe before I turn, right? Bonjour. I got to make sure it's safe, but that's 36 years of experience. Now, how does that relate to the charts? When I first started out, I would see people say, okay, I anticipate price going down. I'm bearish. In the short term. I anticipate price going down. And I'm sitting there like, okay, why? Why you think price going down? Or I would hear people say, I'm watching 43, 22, 25. Right? They chart look something like this. Come here. Get off my screen. Get off my screen. They chart look like this right here. Make the candles big so y'all can see them. Right? They chart look like this right here. And then they would say something like, I'm expecting the price to come down to 43, 22, 50. What? Why do you think price going to 43, 22? We up here at 43, 42, 25. Why do you think price going down to 43, 22? You know what I'm saying? They would just say stuff. They would just say stuff like that. I'm like, or they'll say overall, I think price, my overall target for where price going is 43.66. What? But they don't explain why those price points are their targets. You know what I'm saying? They don't explain why those things would be their targets and put it in the concept of ICT. Let's put it in the concept of ICT real quick. Right? come here and do this. Now, hold on, y'all. Give me a second. We're gonna put it in the concept of Michael J. Huddleston. Right? Do this. Well, if I do it there, y'all can see it over here. Y'all can see it on that screen right there if I do it there. So I'm going to do it on this one where you can't see it, because he would be talking, looking at multiple screens. Right? He would be talking, looking at multiple screens. Right? And then he would say, yeah, we're in I'm bullish. I'm bullish on the ES. I'm bullish on the ES, and my price target, my upside price target is 43.92.50. Right? Now get me something, scribble down 42.92.50. Then I'll come over here to my charts and I'll get me a fancy dancy line, right? And then I'll take that line and I'll make sure I put that line at 43.92.50, 43.92.50. Press enter, and it'll pop up in some ambiguous, if that's the word I'm looking for, point right there. Right? And I'm like, what in the freaking world? Why is that your price point? Michael, what are you talking about? Because he's talking from 30 years of experience and 30 years of techniques that he's been using forever, or techniques he has not revealed to the rest of us yet. Right? So I try not to just throw out, you know what I'm saying, vague information like that. I try to tell you why I'm picking levels like that. Now, I know you're probably saying, Tim, what did you do on that other screen to make you say that your price point, your upside price point, talking in the, the sense of ICT is 43.92.50, right? Well, let me tell you, right? Well, before I tell you, I'll also tell you that a low-hanging fruit objective would be 43.63.75. Right? 43.63.75. Right? And just looking at, let's put that one on the chart, right? Let's put that one on the chart. And then we go through. And now these ain't the levels I'm watching for tomorrow. I'm just getting to my point, right? Right. And looking at this chart, right? What kind of realistic sense do those price levels make, right? What kind of realistic sense do they make? What about where these price levels fall, right? Make sure y'all can see is good, because a lot of times, like, the wicks and stuff don't be showing up. It looked like y'all can see the wicks and stuff pretty good, but y'all can't see that one over there. Okay. All right. Look like y'all can see the wicks and everything pretty good. I know some people watch on their phones, so I want to make sure everybody can see it well. Right? Now, this price point here, when we get over here, right? Yeah, we got a consolidation right here, but with that specific point, it don't fall anywhere that's like, oh, I see exactly why he said that in relations to any of his PD array matrix, right? It's just above a little, like, consolidation area, right up here in these wicks, right? Right up here in these wicks. And then over here, the same thing. This one here, it's like what is what in the world? What is that? Where did he get that price point from? What's going on over here? Right now, before I get into what I'm watching for September, let me share with you, right, why I said that. And you can use this for anything. You can even use it for where we are right now, if you would like to, right? If you believe that price will continue to push up in the short term before continuing down, because remember, we were talking about how the monthly chart was showing bullish tendencies and how September was playing into that. We was in a bullish pullback, a bullish retracement, right? And we had got to a point where we expected price to bounce and go try to attack the buy side on the monthly level, even if it's for the short term. We were coming to the worst month. Remember, we talked about if September went all the way down to here and then retraced back up and did that 20 to 30% off of the low, that 20-30% pullback, it would put us right there around 4% negative on the month, and that would play out beautifully for the seasonality. Remember, we talked about all of that. Okay, now if you believe price is still going up, right, and I still ain't got to my levels yet, I'm starting to talk. And since I was babbling, saying a whole bunch of nothing earlier, I feel like I'll babble and like try to give a little bit of something worth anything, right? Now, but my feelings are a little hurt because it ain't nothing but 9 of us. So I might not even save the video on the tube. I might just leave it up for the members only, because I usually do this kind of stuff with the members anyway. But you know, ain't nobody show up, so people probably in traffic. Anyway, institutional market structure, right? Y'all know how ICT teach institutional market structure, right? I ain't gonna get deep into it, but with institutional market structure, right? You just look at like excuse me, how the order flow pushed price around, and then when the market, for lack of versatility in my word choice, starts to give you market structure. So if you notice, what do you notice about this area right here? From the low, right? This low right here. Let me see something. All right. Can somebody tell me what they noticed about those 3 lows right there? Right. I'm going to need a save video, please. I can only stay until 6. I can only stay until around that time too, because I got to go pick up my kids. I'm going to be gone by that time. Michelle, fuck up. What do you notice about these 3 lows right here? Anybody, somebody in the black spider should notice off top, because we done talked about this before. Michelle, I know you know. I know you know. We talked about this before, right? What do you notice about these lows right here, right? When it comes to institutional market structure, what do we notice about these lows right here, right? I'm waiting, Michelle. I'm putting you on blast. I'm waiting. And Rhonda, I know you know too, because we've had this conversation before. Now, it ain't got nothing to do with it. I mean, if you want to look at it like that right there, that's fine. But we ain't talking about like
short-term lows, intermediate lows. We ain't talk about that right there, right? Okay, I'm gonna give you a clue, Michelle and Rhonda, since y'all ain't answering. What do these three lows form? This one, this one, this one. What in the Judas swing are you talking about, Michelle? What do these three lows for? I'm putting the numbers there to draw your eyes to it. What do the three lows form? Rhonda, I know you know. Michelle, I know you know. Is Lil Hawk in here? Lump, my brother, if he in here, everybody who was on the ICT live swing low, they all form one swing low. This swing low, that swing low, and that swing low all form a swing low. We have a low with a low to the left and a low to the right. Mannequin body parts, exactly. It's a mannequin body part. Right? So whenever and then like I told this person up here, if you want to look at it as, having like, when you got like short-term lows, intermediate lows, right? So this right here, this low right here would be an intermediate low, right? For people who don't know that, let's visit that since Meta, hey, Meta, come here, Meta, come here, right? So since Meta brought that up, let's talk about that. All I see is big money moving it. Right, big money moving right there, right? So this right here would be an intermediate low, right? What makes it an intermediate low? Because if we look this way, right? If we look this way, we got a short-term low there, right? And then if we look this way, we got a short-term swing low there. So this is a low with a short-term low and a short-term low to each side. That's an intermediate low, right? Right there, because you got a low with a short-term swing low and a short-term swing low to each side. Intermediate low, right? Over here, this right here is an intermediate low for two reasons. One reason, because you got a short-term low, right, to this side. You got a short-term low to this side, but you also have an imbalance right here, right? If you have a low or high that reprices an imbalance and gives you displacement off of it like that right there, that automatically makes it a intermediate swing, right? But so it's two reasons why this one is an intermediate swing. So because it's got the short term and the short term on each side, and the fact that it repriced to a fair value gap and then gave you displacement up, that's an intermediate low, right? A long-term low is a low with an intermediate low to the left and an intermediate low to the right. So that's a long-term low. So for Meta, talking about short-term lows, long-term lows, all of that, this right here is a long-term low, intermediate low, right? This is a long-term low because you have two intermediate lows on either side of it, right? This low, higher, this low, higher, this intermediate makes that long-term. But that's not what I was talking about. Take that to the bank. That's a free one. Brought to you by Meta. Or Meta like the universe, or Meta like come here, right? Now, anytime you see the institutional market structure form like this right here, right? You can grab your Fibonacci tool. Fibonacci tool. You get your Fibonacci tool, right? And go to the low of that long-term low, right? Go to the low of that long-term low, click it, right? and go back to the high of that swing leg, right? Turn on your Fibonacci projections, right? And a half a standard deviation is 4363.75. Did y'all write those numbers down? Did you write them down? The first target I said was the standard deviation, which was 4392.50. Right? The second one I said was 4363.75. Right? The reason why this was my ultimate target, it was one standard deviation, right? When the price comes down, how far can it swing? Remember, we come up, come down, how far can it swing? Should we do it for Rocky, y'all? Should we do it for now? We're gonna do it for Rocky, right? How far can it swing? Right? That's one standard deviation up, right? Now, second reason why I said 43. Now, this is one of the things where you want to see how price reacts at this 43.63.75. This is another thing. When y'all hear me say, I want to see how price reacts at this price point right here, right? I try to give you reasoning behind that. Well, Tim, what's your reasoning behind wanting to see how price reacts at 43.63.75? I'm glad you asked that question, little Timmy Rogers, right? I'm glad you asked that little question. If I turn on my new week opening gaps, 43.63.75 falls smack dab in the middle of my new week opening gap, right? And knowing what we know about new week opening gaps, right? They tend to be a magnet for price. They tend to draw price to them, right? They tend to draw price to them, right? So the half a standard deviation falls smack dab in the middle of the new week opening gap at 43.63.75, right? So instead of just throwing numbers out there and be like, those are my levels, now you understand why I said that. Now you see why I said, now you can use this same technique for anytime you want to project for yourself, right? And then when another way that I go through and I look for opportunities of how far something can go, right? Y'all already know what I do. That's when I pull out the Fibonacci's, right? Well, Tim, what's the difference between the Fibonacci's and the Fibonacci's, right? I'll tell you the difference between the Fibonacci's and the Fibonacci's, right? The Fibonacci's, right? What I do, let's do this so it can make sense for y'all. We're going to come here and we're going to stop it right there where we can't see where price has gone, right? And I know y'all say, like, anybody who ain't, you know what I'm saying, real family, they like, yeah, he doing a lot of hindsight, but this stuff we do all the time. So we get the Fibonacci's, and what's the Fibonacci's? It's the same thing. You get a fib retracement tool, right? And you start at the low or the high, right? That start to move, and then you look for an area where price starts to do what? Consolidate. Consolidate. Consolidate right there, right? And once you find an area of consolidation, right, it don't have to be perfect. You can try to get super perfect with it, where you go from like the highest point in the consolidation to like the lowest point in the consolidation, right? And try to find the exact middle. You know what I'm saying? It ain't got to be that perfect, right? Where you come from the low or the high, and you stretch the Fibonacci tool up until it hits like that's the exact middle. You ain't got to be that perfect, right? You really ain't got to be that perfect. You just I just come up to like somewhere around the consolidation, but let's just be perfect and go to the exact middle, right? Boom. right? We get to the exact middle, and then that way we'll be like, hey, how far can this run realistically go, right? And that's how we do it. We got it up there at 43, 54, 25, right? We can expect it to go, you know what I'm saying, at least up there. So that right there gives you a comfortable indication that if you decided to get long in anywhere in this area, you can comfortably expect to take out this high, right? This is above that high, and you can anything over here. Oh, maybe we might be targeting this fair value gap right here. You know what I'm saying? You may start looking for places you can shave, right? I'll shave some there. You know what I'm saying? I'll shave some here. You know what I'm saying? I'll shave some at this high. You just look for places where you can shave because of this consolidation coming from this low right here. We can realistically expect it to get we don't do we have anything in it? It's a tiny gap right there, right? Tiny gap there. So that takes us pretty much up to that tiny gap right there. Little tiny gap right there, right? So let's move price forward. Look at who stole the freaking cookie. Look at who stole the freaking cookie. Where did we go? Up to the tiny gap right there. Up to the tiny gap right there and rejected off. All by pulling out the 10 minutis coming from the low. You know what I'm saying? So all your points of interest were hit in this case. That shave point, that shave point, that shave point, and then that little teeny one right there tapped into that order block and rejected off, right? Boom. That order block right there and rejected off. And that happens to be a bearish breaker right there also. So it hit this bearish breaker, this bearish order block, and rejected off, closing back inside this fair value gap right there. Now that I said all of that, projection, I missed when you put that in there. I don't know what that was, but yes, projections. You probably was talking about projections. We can put fib to give us an idea of objective. I ain't gonna hold you. I'm gonna say you from somewhere not in the US. The way you said objective. And your name is Meta. I'm saying you from somewhere not, and yes, you can use Meta. Hold up, Meta. How long you been tapping in, Meta? How long you been tapping in? You got to Eric. Y'all, you must be new here. Oh, you French. Okay then. Shout out your shorty with the Batman on. I see you, Batman. I see you, Batman. I'm cool with Batman. You know, I'm Big Spider. Me and Batman cool. I like that. I like that. Meta, Eric. How long y'all? You must be new here, Eric. You if you want Fibonacci's like this right here, you already got them. If you got TradingView or any other platform, you know what I'm saying. All you do is get your Fibonacci tool, right? You get your Fibonacci tool, right? And you go to the settings, right? You go to your settings, right? And then once you go to your settings, right, you gonna the field for sale. I love it. I love it. Yeah, it's on sale. The Fibonacci on sale for $99 in the exclusive Discord. That's $5,000 a month. You hear me? So for the Fibonacci's, right? I got templates set up from if you like, just say this my Fibonacci tool, right? And when you open up a Fibonacci tool from the beginning, right, in TradingView, it's probably gonna look like this right here. This ain't nothing that I was gonna be talking about, but this person asked the question. Y'all know how it is when people ask questions. I'm gonna answer questions before I give up the goods. I'm gonna answer questions before I give up the goods because I'm all about trying to help people. Right? I'm all about trying to help people. I ain't here to try to get no money out of nobody. I'm just here to try to help people. You feel me? All right. So when you first open up a Fibonacci tool and trading view, it's probably gonna look like this right here, right? It's probably gonna look like this right here. What you do, you go like if you look at when I right click on here and I go to templates right here, you see all these templates right here. I got one that says CE or MT. That's consequent encroachment or mean threshold, right? What that is, I just want to see 50% of whatever PD array that I'm highlighting, right? If I click it, I have one line. The 50% mark. That's it. Because that's all I want to see. I put it on the high or the low that I want to see, and I move it around and connect it to another high or low. And it's going to give me just the 50% line. If you look inside there, the only thing I got showing, you check the check for whatever line you want to show is the 50%, right? If I want to go to projections, right? If I want to go to projections, if I want to project what price going to go, right? I got TLR projections, right? Now, when you're making projections in the Fibonacci tool, right? When you go into your settings, you want to make your settings all negative numbers, right? You want to put 0, 1, right? 0 is 0%, 1 is 100%, and then the rest of the percentages you want to do half a standard deviations, but you want them to be negative. So you want to put negative 0.5%, I mean negative 50%, negative 100, negative 150, negative 200, negative 250. You want to do half a standard deviations, but you want them to be negative because with the Fibonacci tool, the direction that you stretch it, right? When you click, right? You click in a spot and the direction you stretch it is the way you want it to go. That's where you want price to run. So in order to get the projections to work, you have to put in negative numbers, right? If you put in positive numbers, the direction you stretch it, the number's going to be going the opposite way, right? It's going to be going the opposite way because the Fibonacci tool is a retracement tool, right? It's a retracement tool. So when you put in a positive number, you're telling it, I want to see how much of a retracement this will make. So the direction you put, you saying price has went this far, and I want to see how much of a retracement, meaning the other direction it will go. So if you put in positive numbers, the numbers are going to go in the opposite direction, right? To make it an expansion, right? You need to put in negative numbers. How far past this will it expand, right? Because it's made as a retracement tool. So you know what I'm saying? You want to see, and then they got like an expansion tool over here somewhere, right? Right there. Expansion, boop, boop, boop. See, right? Once it retraces, how far will it expand? You see what I'm saying? They have an expansion tool, but you have to put in the retracement to get the expansion. I don't want to put in the retracement. I just want to see the expansion based off of what I am looking at. So I use the retracement tool and I put in the negative numbers because I just, hold on. My son texted we done early, but he only texted me. Sorry, y'all. All right. Yes. So, and as you see with the expansion tool, right? You see how I come here with the retracement tool, I click there, I pull up and stop, and it gives me my expansion. But with the expansion tool, right, I got to click here, pull up here, and then give it some type of retracement, right? And if I want the exact same thing, I would have to come all the way back down to the initial place where I clicked, right, to get the same type of expansion out of this right here. I would have to go. I literally would have to, if I get the expansion, I would have to go up, go to the high, and then come back to the low. You know what I'm saying? To get the same effect, right? Too much work for me. I just used the retracement tool. And then if you want to know what the settings are, those are the settings I use. I go all the way up to -6 in half a standard deviations, 0.5%, -0.5%, 1%, 1.5%, 2%, 2.5%, 3.5%, all the way up to 6, but negative numbers, right? OTE, right click it, go to templates, OTE, boom. These are the OTE settings from ICT. They're all positive numbers, right? Why? Because if it go from this low to this high, I want to see where is 62% retracement right there. Where is 70% retracement? Where is 79% retracement? Price comes back here. I'm an OTE trader. I'm getting long at 62%, or I'm getting long at 70%, or I'm getting long at 79%. Right? The Fibonacci tool just gives me the exact price point that that percentage of retracement is. Right? My mind can't calculate in between 43.70, 275 and 44.90, 275 that my entry price need to be 44.1850 for a 62% retracement, or my entry price need to be 44.0875 for a 70% retracement. My mind can't calculate that fast. So I use the Fibonacci tool and use the techniques that Michael taught, and voila, Bob's your uncle. Thank you very much for interrupting class, asking about the Fibonacci tool. Now, where was I over here? Oh, we had talked about all of this. We had talked about all of that, right? Everything was done. I was getting ready to go into what I was watching right now and getting my charts together, right? So let's go through this pretty fast, and then we're gonna get out of here. I spent a whole lot more time than I wanted to talking about all that, but y'all got plenty out of it, I would hope. Right? I would hope. Now, you're welcome, Eric, and welcome to hanging out with us. How long you been hanging out with us, Eric? Okay, so today, so today, um, y'all know I was bullish on the day. I was looking for price to move up. Price, as we talked about earlier, had got up to the buy side that I wanted it to attack when I was, running my mouth. Didn't get a chance to trade it, and then it kept going stupid, and it went all the way up into this bearish fair value gap up. As we saw, we went all the way up into the little fair value gap, right into this bearish breaker over here. I didn't have the breaker marked out. A lot of times I'll mark out breakers and order blocks, and sometimes I won't. Only time I mark out order blocks is when I want to see how price reacts to it, when price gets to it, right? If you notice right here, I had this high of this hourly order block marked out right there, right? What made me mark that high of that hourly order block, right? Well, let's see, right? So on the 8 o'clock news candle, right, when we went up and took out this buy side liquidity here, we had a heavy rejection right there. Super heavy rejection right there, right? Boom, took off, right? That was thing number one, right? That was thing number one, right? We took out this buy side, had heavy rejection right there, right? Thing number two, all of this right here is efficiently delivered to, right? All of this area right here is efficiently delivered to, right? What makes this area efficiently welcome? It's your first time. Welcome. What makes this area efficiently delivered to? buy side, sell side, 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 right? It's efficiently delivered to, right? Once the what happens when we leave an area, somebody put in the chat what happens when we leave an area that has been efficiently delivered to. What do we call that area once we leave it? Once we get efficient delivery of liquidity, buy side and sell side delivery, efficient liquidity delivery, and then we leave that area. What do we call it? No, not the pineal. What do we call the area? Not the move. Balanced price range. There you go. This is now a balanced price range, right? Not the move. What do we call the area? Not the pineal. This is the pineal. The expansion is the pineal, right? The expansion is the pineal. But the area, we call the area a balanced price range, right? This candle right here, that candle right there told us that this is a balanced price range, right? This candle right here at 11 a.m. told us that this is a balanced price range, right? So therefore, if y'all remember, go back and look at the video. I did not have this this bullish order block high marked out this morning. It was not marked out. I just had two levels. I had this buy side and this buy side marked out. That's all I had marked out, right? Once we took off, I left that buy side there so I can remember where it was. I can see it with my eyes where it was, right? And I had this high of this order block marked out. Now, y'all know I use, when I see long wicks like this, I'll be like, that's a news wick. Get out of here. But in this case, since this is a balanced price range right here, right? I want to see this order block high be extremely sensitive. I want to see it be extremely sensitive. If we don't be extremely sensitive at this order block high, right? Why do I want to see that? Because we have an imbalance below this imbalance right here, right? We got an imbalance here and we got an imbalance there, right? So we got an imbalance inside the balanced price range. So if price starts coming back down, right? If it's not extremely sensitive to this order block, then this is where price is going, right? This is where price is going. So I want to see how price reacts here. And if price reacts, right, rejects this, then I will be looking for a reason to get long off of this area here instead of this area here. That's why I got that order block marked out, right? And with the benefit of hindsight, I came back here this afternoon to try to get long, right? Came back here to try to get long this afternoon with a very small position because it was after 3 and I'm trying to coach myself into taking trades after 3. So I tried to get long with a very small position, but price just started to chop. And I was like, look, I'm just going to get out. Took a small profit. I ain't even let the trade try to run. I just took a small profit and got out of there. But if you notice during the 2 to 3 hour, right? During the 2 to 3 hour, coming back to this order block, it looked like it probably was something very good set up in there to go long off of. I didn't trade it, so I don't know off of that. But when price came back here, it was highly sensitive to it, right? And then the what's name was going, it went all the way back up to where this fair value gap that we had repriced and left. Once we reprice it like this right here and then leave it, right? Now this in itself is a balanced price range, right? When you have balanced price ranges, right? You anticipate those price ranges to be resistance or support, right? This is a balanced price range and we're below it. We anticipate it to be resistance. This is a balanced price range and we're above it. We're anticipating it when price come back down into it, right, to be support. How far do we anticipate it to support it? Wherever the imbalances is on the 1 hour, we have an imbalance right here. You know what I'm saying? You would want to look through the different price points to find where the imbalances are inside this balanced price range. And that can be your target for price drawing down into it, right? Before proceeding back up. What makes me think that price may want to draw down into it before proceeding back up? Because we rejected off of this resistance. Price rejected this resistance right here, right? Well, Tim, what do you mean? I'll show you what I mean, right? Looking at what price did. We came down, we took out external liquidity here, pushed up, took care of all the internal liquidity on this price leg right there, right? On this new price leg right here, when we came back up, taking care of all the internal, right? We came down and took care of the internal liquidity on this price leg right here. And then we took out the external liquidity, right? Not only did we take out external liquidity on this price leg right here, we took out the external liquidity that we didn't take initially when we came back and took out the internal, right? So now we've taken out external liquidity of this price leg, giving us a bullish breaking market structure from this price leg, right? So now that we went down and took this sell side here, we came back up and got a breaking market structure on the hourly. So now we got an hourly breaking market structure right here. So now eyes will be turned to at least this high right here, right? That's the next high up. Eyes will be turned to at least that high right there. Boom. There's one level that I got my eyes on. What is that level? 46, 43, 66, 75, right? 43, 66, 75, right there. That's far enough that we gonna go. We ain't gonna go no farther, right? If you want to know all the levels, just get you a Fibonacci tool, run it from that low to that high, and put it on projections and see where it go. Looky, who stole the cookie. The half a standard deviation from this right here is 43, 66, 25, right? That high is at 43, 66, 75. Looky, who stole the freaking cookie, right? If your target is this high right here, right? You got buy side resting above. I said I wasn't going to do them all, but you got buy side resting above 43, 83, 50. The Fibonacci extension goes up to 43.96 right there, right? So if you want to know them, look at run your Fibonacci tool and Bob's your uncle. Now, we came up and we used it. We came up, got a breaking market structure to the upside. Once you get the breaking market structure to the upside, what does price do? Consolidate. Where's our thing? Michelle got 1 minute. Michelle got 1 minute. Michelle, give me 2 minutes and we gonna get you. Michelle got to go. Where's my where's my thing? I don't know where my oh, there it is right there. What does price do? Consolidate, right? Consolidate, consolidate. Get out of the way, right? This is our consolidation, right? This is our expansion. Consolidate, consolidate, expansion, our expansion or pang out, retracement. Now we're looking for the retracement and we're looking for the delivery, right? Consolidate, expansion, looking for the retracement, right? Right. So we started coming down, we started retracing, we filled in one imbalance on this price leg, internal liquidity, right? We took out external, we moved down and we feel one piece of internal liquidity, right? Price went back up, hit our anticipated resistance, right? Now we still have a piece of liquidity down here, internal liquidity for this price leg, right? Now, if you're an OTE trader, right, you can run your Fibonacci's, right? Set it for OTE, right? Set it for OTE. 62% OTE will put you right around the high of the fair value gap at 43.2175. 43.2175. If you're 70% OTE, right? You're anticipating this getting blown through a little bit, right? You're anticipating that imbalance getting blown through, and your level would be 43.1750. Let's go down to a lower time frame and see if there's anything down there that can help you, right? Looking at the 15-minute, there's no imbalances down there. The only thing down there that can help you on the 15-minute would be this wick right here. We got consequent encroachment of that wick that's below the 79%, right? So I'm not looking for that to go all the way down there. Why? Because we got an order block right there on the 15-minute. That order block is in line with the hourly time frame fair value gap, right? We got an hourly time frame fair value gap right there. Then we got a 15-minute breaker that's right next to that order block, right? So I don't anticipate the 15-minute breaker is close to the 70%, but you know, I'm looking at the imbalances. I look at the imbalances, so that's what I'm watching. I'm watching for, now when I say I'm watching for, when price get here, I want it to show me that it wants to reverse. My trading, when price gets down to this 43.22, that's the high, 43.20, that's the low, right? 43.22.25, 43.20.25, that's the low. When price get there, I want to see how price starts to react. If you're an OTE trader, you just go in when it hits your 43.2175, 63%. That's how OTE works. If it hit 43.1750 and you're a 70% OTE trader, you just go in. You can set your limit orders there. Your stop will be below this 43.01 down here, right? But for the PD arrays, the way I trade them, when price gets here, I want to see how it reacts if it wants to go back up, right? Again, we went back up into this. It gave us our resistance. Now, to the upside, right? To the upside, if price is done with this area and it's going to leave that right there, right? What's gonna kill everything for me coming back down here as far as giving a retracement for this entire price leg, right? If we take out that high right there first, get displacement above that high right there first, right? Strong displacement above that, all bets are off because there's an imbalance above price there, and that imbalance is right there at because that would be for this price leg here from after we left the balanced price range, right? That will be taking care of internal liquidity, right? And then going back up and taking out external liquidity, saying I want to move on up, moving on up, taking out that high right there at 43.55.75, right? Then I'm not looking down here anymore. Well, that's what I'm looking for. Appreciate y'all for hanging out with me. That's all I got. He turned back to internal liquidity. Okay. That's all I got. Michelle, you can go ahead and go now. I've been on here a lot longer than I anticipated being on here. Before I leave, I'd like to give you an opportunity to ask anything you want to ask in relation to what I spoke about. I don't feel like going into anything new, so if I didn't speak about it tonight, do not ask. If I spoke about it tonight, please feel free to ask while I take a sip of my last little bit of high-quality H2O. How do you say you welcome in French? I see you put in there merci. I hablo español. I don't parlez-vous français. I can't parlez-vous. I hablo. How do you say you're welcome in French? Are you actually in France or you just French? Where are you? Are you in the US or are you actually in France? I can't say that. I can't say that. Avec plaisir. I can't say that. Avec plaisir. I was close. Avec plaisir. Avec plaisir. I was close. Avec plaisir. For the haters who don't think I was close. If Robson on here, I know he'll be hating. So now I got to show you that I was close. I said avec plaisir. That's what I said. I said avec plaisir. Right? Now let me share this right here. Chrome tab. Avec. Boom. Put it like this so y'all can hear it. I'm gonna let y'all hear her.
Avec plaisir.
Yeah, y'all can hear it. She said avec plaisir. Y'all heard her?
Avec plaisir.
So I was close because I said avec plaisir. I said avec plaisir, and she said avec plaisir.
Avec plaisir.
I was real close. I'm gonna say that's a win for me. Hear me. I can parlez-vous too. Take that, Rocky. Take that. Okay then. So we got members overseas with it. You hear me? We got members overseas with it. I feel special. Hey, dig this. Let me tell y'all how I'm gonna say this and I'm gonna go. This how I know I officially made it. I have officially made it as a YouTube financial guru, or am I a furu? I don't know. Which one am I? If I'm a guru, y'all put a 1 in the chat. If I'm a furu, y'all put a 2 in the chat. Can y'all see this? Y'all probably can't see it, right? Right? Y'all probably, I don't know if y'all can see it. Will it focus on it? Y'all probably can't see it, but I just want y'all to see what I'm reading. I just want y'all to see what I'm reading so nobody won't. PB think I be making stuff up. Let me focus on this real quick. Hold up. Am I not? Oh, hold on. I got it set to face. Can I put it on manual? Hold on. Uh-oh. Try to put this on manual focus. Okay. Uh-oh. I'm sorry, y'all. Trying to put it on manual focus. Trying to put it on manual focus. Right. See right there. Yeah. So there. See, that's what I'm about to read right there. I want y'all to see. I ain't just making it up. I want you to see the words. You feel me? Right? That's what I'm about to read. I'm about to read that. We are Chicago-based. It's hard for me to read it like this right here. All right. We are a Chicago-based clearing firm, whatever their name is, and futures broker. We are looking to partner with additional futures educators to provide them with platforms and support for their customers
as they transition from the education / demo phase to live trading with we typically provide our affiliates with exciting promotions for their followers, dedicated landing pages on our site, and more. Blah 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 blah. Right? I said, Mama, I done freaking made it, Mama. I done made it. I'm getting emails from people. I'm getting emails from people who want to team up, with me to try to snow people. Anytime, I'm telling y'all like this right here. Anytime you get emails like this right here, right? I ain't gonna say any. 80% of the times you get emails like this right here, these people are freaking shiesty. They shiesty, right? What they want to do, they want me to get on. It's like they reach out to people and say, hey, you got a following. You be doing stuff on Al Gore's internet. We want to give you this stuff, and I want you to go out there and talk nice about it to your following and dupe them into signing up with us. Get out my freaking email. Mama, I done made it. Mama, I done made it. I put a 1 because Big Spider. Shout out Father Legends, man. Shout out, exactly. Run away. Get out my freaking inbox with that, man. Mama, I done made it. I'm on top of the world, baby. I'm an influencer. I'm not a bull or a bear. I'm a beast. You feel me? Hey, do me a favor, man. Do me a favor. If your loved ones are still here with us, like your parents, your mother, your father, your spouse, your children, your friends, other family members that you're close with, do me a favor, man. Let them know how much you love them right now today while you got the opportunity, because ain't nobody promised tomorrow. Nobody's promised tomorrow. Life is too short. Take advantage. Don't live with the regret that little Timmy Rogers lived with because he didn't take advantage of the opportunity that he had to drive across a bridge an hour and some change away when his father was right there. And then he didn't take an opportunity to drive across that same bridge once he moved like 4 hours away, but he used to drive 3.5 hours, 3 hours to go see his daughters, but he never made that extra hour to go across that bridge to go see his daddy. And then his daddy passed away. Don't live with that regret. Take advantage of today while you can. Don't just say it. Don't just show it. Say it, show it, and confirm it. Because one of the worst things you can do is sit there and just pour out all of your love to somebody and they don't receive it because you're not speaking in their love language. Open up the lines of communication so you'll understand how you need to express your love to this person. You know, I've been there with my kids thinking that I was father of the year, and my sons thinking they got to get out my house when they 18. I never said that. I've been there with my spouse here recently thinking everything is fine. Come to find out, she's not happy as I thought she was because of a lack of communication. Open up the lines of communication and speak in their love language. If their love language is words of affirmation, don't shower them with physical touch. If their words is physical touch, don't shower them with gifts. Right? Speak in their love language so that they can receive the love. Your mom still alive? Your daddy still alive? Call them up, man. Say, hey, mama, hey, daddy, how you doing? I was just thinking about you, girl. I was thinking about you, boy. Go by your mama's house. Take a trash out for her. Wash your car for her. Let her know that she's appreciated. You are appreciated. Dear mama. Right? Go in the other room. Hug your spouse. Hug your kids. You know what I'm saying? Kiss the dog. Slap the cat. Hug the gerbil. Thump the turtle. Whatever your pet of choice is. I appreciate y'all, man. Till the next time I decide to jump on Al Gore's internet, y'all be safe out here in these trading streets. Y'all know what it is. Big Spider gone.